Hi guys, Harry Yotis here, professional trader for 20 years. Started my career way back in 2005 and still alive in 2026. Okay, so let's get started on today. The first day, Monday, the 16th of March, the first day of the third week in March. Okay, right after the Ides of March on the 15th. So maybe that's an omen and something good is going to happen going forward, because we certainly have had some bad news because of the war and a bad market for the past month or two. Okay, so today's big event is, of course, oil and OPEX, I like to call it. Don't forget, we have OPEX options expiry coming in this Friday, the 20th. And of course, oil. This is a one issue market at this point. It's oil, Iran, Straits of Hormuz, and now we're going to bring in OPEX. Okay, but first let's talk about the technical picture. We're still neutral, even though we're very, very bad in the past couple of months. Let's say it's still been relatively strong. We're stuck in this chop zone. Okay, the war that's supposed to start World War III has only knocked the market down 5%. Okay. Mind you, it has done it with an extremely fearful sentiment in the market. Okay, so we'll get to that soon. But so far, the technical picture right here is just neutral. We're stuck in this morass, this slimy marsh, a bog that we can't get out of for all this time. Okay, with negative sentiment coming up right now. Sentiment. Fear and greed index. We always talk about sentiment with the market. Okay, still at extreme fear. We went down to 2023, and all the sub indices are fear or extreme fear. The VIX went to neutral. Okay, this is the only bright spot. Okay, so let's see what the VIX is doing. Okay, it bears mentioning. Okay, we had this huge spike up that's been faded. A huge spike up means the market went down, and it's reminiscent of these huge spikes up and weakness after. Weakness is positive for the market. Okay, same thing here. We had a spike up and then down again, spike up and then down, spike up, red candle, and then down. Okay, we've seen this a lot. Can we get a double spike up? Yes, it's happened. If we go all the way in the past year, look, this VIX has been very, very volatile. This is going down. This is 2020, and then in 2021 has been going down, the VIX. So this is very positive for the market, although with high volatility. This area right here, you have double spikes. You have a number of double spikes up. But remember, here it's 2022. This is during the recession. And we would expect to see that. Now we're not in a recession. We are in a bull market. To see that would be weird. Okay, we're not in a downwards moving market. So to me, I think this bodes well that we see a continuation, a slow move downward after this big spike up. So the VIX is looking good for us. The SPY we mentioned was, of course, neutral. And of course, the fear and greed, we're stuck at extreme greed, which is good for the bulls. Okay, this just tells you that everybody, what this entire analysis shows you is that everybody is positioned short during OPEX, okay, because of the war, because of doomsday scenarios. Okay, so this is good to know. You want to know where the positioning is, so you can do others, so you can go the opposite way when it gets to extremes. And not when it doesn't get to extremes. You only do the opposite of what the market is doing, only at extreme situations. Never before you want to be with the trend, okay? So, and by the way, the trend is bullish. We haven't broken any kind of like technical pattern to say that it's bearish, okay? And remember, we're only talking about the technicals here, and the sentiment, of course, is extreme fear, which is good for the long side. Okay, so let's talk about the main event, oil and OPEX. I'd like to talk about oil, okay, today, because it represents the entire market. Okay, let's go to the oil chart here. This is U.S. oil. Okay, let's go to some of the headlines that we had today regarding the war. Trump comes out in the morning and says Iran wants to make a deal and is insists Israel won't use nukes. So, guys, as a trader, you want to see what the sentiment is going forward, what it is now, and what it has been doing this past couple of weeks, okay? Max fear in oil in the market for the past couple of weeks, okay? You can see this huge moves, in oil. And it is evident, okay, in the VIX, the oil VIX, which we looked at before, OVX, okay? You can see here the oil VIX went to as high as 123, and I was still sitting at 101, okay? It's still very, very high. But if you go back in time, you can see that this 123 is a very high level, okay? This is COVID, okay? This spike up is COVID. You can just forget about it because this is when oil went negative in the futures markets, okay? But if you go all the way back in this VIX of oil, okay, if you go all the way back, you see this is our high, 123. It's the highest level of VIX, not counting COVID. That's what we're experiencing right now. We are at 123, which is very, very high. So the VIX, the oil VIX, is telling you that we are in a situation in the oil market when extreme fear has been realized, okay? And what happens as traders is, like, and everybody here, there are no more shorts. I think the shorts got out during this spike in US oil. So now it's just market driven, if you will. So I think, like, we might be getting to an end to this because everywhere you hear, like on Twitter for the past 2 weeks, with World War III, $200 oil, $250 oil if the Straits of Hormuz are closed. Everything, all the negative sentiment is being priced in, and everybody's like long oil, expecting $200. Okay. What else do we have here? We also had other news, okay, that Iran is allowing select vessels to cross the Strait of Hormuz after verification. So you're seeing some news stories that go counter to the narrative that the Strait of Hormuz is going to be closed, is going to be disaster, okay? So this happens like when everybody's positioned on one side, you're going to get some of these news that come out, or something's going to come out that is making this oil market very vulnerable to a crash, another move down. If there's peace talks, if there's some kind of negotiation, oil is going to get smoked, okay? I'm not telling you guys to go short or long. I'm just telling you, don't go long here, okay? You don't have to go short, but I think that this hype might be overdone, okay? Because everybody's positioned on one side. Yes, it could happen, but now the risk reward to the long side is very, very small. You're taking a huge risk for a small reward, okay? Because you would have to, I just don't see any huge upside coming, especially when we are at extremes, and like something is going to come out. I have a feeling as a trader, I've been doing this for a while, something's going to come out to bring this down. That's it. That's all I'm going to say. Okay, so I'm not going to tell you guys to go long or short. I'm just going to say, I'm not going to tell you guys to go short, take advantage of it. I just say going long here is not a good risk reward. I just think because everybody's positioned on one side, any piece of good news in the Middle Eastern front, or the U.S. winning, or whatever, or somehow the Strait of Hormuz issue has been dealt with in some way, okay? It's not even the 20 million barrels, like maybe 10 million are allowed through and the other 10 are redirected. That's it. Oil crashes. That's what's going to happen, okay? So we talked about oil, okay? So let's talk about the second part here, OPEX. Normally during OPEX, we have the market makers trying to keep it within a certain range to have all the options expire worthless. But the past couple of weeks, a lot of puts were bought. So maybe this time is different. Maybe I think they're trying to rip it into OPEX, get it higher. Maybe the 680 to 690, 680 to 685-ish level around here. Let's say 80 to 85. This is where I would put the target, just to get rid of the puts. Get them expired with it, and then maybe the market could roll over if the war escalates, who knows. But I think this OPEX, we're not going to have a choppy sideways market. We're going to have a market that rips or goes up into the 680, 685, just to get rid of the recent put buyers, okay? That's what I think will happen with OPEX. It goes against my same theory in the oil market, okay? As a trader, I'm seeing positioning heavy on the short side in the put market, in the options market. We have to kill that premium. Like, that's what the market makers are saying. So any move, any positive news in the oil sector or out of Iran will make the guys, whoever controls the powers that be, bring this market up to 680, 685 to destroy these puts. So that's what I think is going to happen, okay? So let's reiterate, okay? The technical picture is still neutral. We're chopping around this area. I forgot to bring in the moving averages, but an interesting story is that we are close to the 200-day moving average, which is always a great buy point. See, after a breakout to new highs here that happened in June of 2025, a good buy point would be the first touch of the 200. Okay, we'll see. I'm just saying that this 200 here would have been extreme fear. I've mentioned it before. Buying the 200 would be nice, but the 652 or 650-ish level on SPY would have been even better buy, in my opinion. Who knows if we get there? We'll see. But suffice to say that because of such negative positioning and sentiment, I think we go up during OPEX. Okay, so the technical picture is neutral. The sentiment is extreme fear. So very good for people to go long, yes, even during this war. And the market volatility is showing us that we are at a situation that we most likely go down. Very rare to have a double spike during a non-recession type of market, which we have right now. Okay, we're not in 2022. We're in 2026. Okay, so technicals neutral, sentiment in the favor of the bulls. Oil. Okay, guys, be careful with oil. I think everybody's positioned on one side, i.e. long. I think the shorts have covered. You're not going to have any more fuel to the upside. I think any piece of good news is going to tank it. Okay, I'm not telling you guys to go short, but don't go long. I am saying don't go long. It's just not a good risk reward at this point. Everybody was, for the past 2 weeks, you can just feel a wave of negative sentiment. And I feel that today, that there's no more negative fuel to fuel this thing up. It's like just a little bit of air being let out of this negative cloud will tank oil and rip the market. Okay, and OPEX, be careful. I don't think they chop it around this OPEX. I think they might bring it up due to the fact that there's a lot of puts that have been bought. Okay, so that's it, guys. I hope you like what you heard. Of course, like and subscribe if you like what you heard. Leave a comment and I will answer it as fast as I can. And looking forward to how this OPEX ends. Later, guys.